David here with Futures Trading. I want to thank my two subscribers for having joined me here on YouTube. And if you're watching this via a different network, I appreciate the subscribers I have as well on TikTok. So if you're not familiar with Futures Trading, definitely subscribe or either hit a like for me. Support what I'm doing. I really appreciate all the assists and definitely you taking out the time to watch the video means a lot. Appreciate it so much. So we have a new week clearly forming in front of us. Friday we kind of got stuck in that range in the daily static level. I'll show you what that looks like as well. This is kind of what we did with the range overnight, though. Okay, and we're going to take just a really brief look at all this information here. There's the reversal off the mid. All right, and there's the range there. If you're not familiar with the times, I'm definitely going to leave the links below, and you can click on any one of them. It'll show you all of the stuff that I'm about to go over in more detail. So here's the mid of the reversal. We tested back down. Clearly holding the mid is important. We came back down to the means, and then there's the pop. All right, now that's with the overnight information there. Now here we go with the 6:30. All right, so here's 6:30 right before the open. All right, so we have two pushes down. You can remove the first leg, just don't take out the second one there. And of course, they took out that second one there. And then of course we had the two pushes to the upside here. There's the reversal off the mid here. They tested it several times, managed to close beneath it. Not so much a concern because of what we just saw with the overnight range there. So they managed to reverse from the high here. Okay, and there's the mid of that, and they tested that. Kind of tested it again too. As you can see, we kind of pulled away from it. Here's the reversal mid here. Okay, now you can take out the first leg, do not take out the second one, and we managed to turn back around and get right back through the high of the range. So if you're wanting to learn how to trade the ranges, use the trend trading content. And if you're not familiar with what a trend is, again, I'll have a link below, and you can kind of get a idea of what to do with that information as well. So there's the 9:30 coming in. We'll kind of just pick this apart a little bit. So clearly, anything more than 5 bars is considered a trend in my eyes. All right, now you can trade it however you want to. If you like moving averages, that's fine. I have one here on the chart. The only thing I can tell you about moving averages is that you got to make sure you put some context to it. That's all. So here's 6 bars down before the 9:30. Okay, and 9:30 came in here. We had the two legs here. They didn't break this one clearly. And so, it's all about two leg removal. So we can kind of confirm that the reversal is there. All right. So you can kind of see how they made these two pushes here. For an example, two pushes here came back down from this trend down. But clearly we set a trend, back in this direction. So if this trend is going to hold, that's down, clearly we need to blow both legs. If not, we managed to pass that first push, this leg here, but didn't pass that one. So the reversal wasn't confirmed, and we went right back through the high. So there's your trend here. Here's your trend distance. Now, there's a bigger picture to what's going on clearly whenever you're looking at markets because they're, of course, fractal. So here's the push from the open. Here it is. Boom. Kind of pushed up higher even after the trend distance, managed to turn right back around, gave you that 6, and then immediately popped back in the other direction. Everything I trade is predictable behavior. It's really, really important that we're able to take a look at the chart and kind of know exactly what should take place. And in instances that it doesn't, we'll, again, evaluate what's happening from there. All right. So there's the distance that they made to the upside. And of course, once they made it, they tend to drop back a little bit there. And while making this trend down, they made another one back to the upside, and there's the trend distance now. So this is what we're doing currently. All right. Now, the mid of the reversal is important. As you can see, this is the reversal bar back up. They tested that mid quite a bit. And of course, the open of the second bar is just as important as well. And I put that in that video as well. So it'll go into more detail about that. Again, here's the second bar's open. They managed to reach down, test it, pull up, came back to test it. Again, the mid is sitting there. You can kind of get it from this side too. They was turning back up here. Here's the open of this bar is important. They didn't even get all the way to it. They turned back up. Now this is an interesting one. I guess I can show you right now. They managed to make this high here. Here's the second one that's lower. The open of this bar is important. They overshot the turn, but managed to close right back at that open and then drop down even further. So you'll want to kind of pay attention to that. Now, as far as the lines on the bars, that is just the no touch mid. That's the no touch mid. I made a video about that. That's a price action method. It's very, very simple. All you're getting is one bar. Okay, and then you have this bar here not touching the mid of this bar. Now that's important. Now, when that happens, no close beneath here, and definitely a hard stop right there. And so all of the lines that you're seeing on the back of the bar is the hard stop. Okay. And so, no close. And if they manage to close, that's fine. Just a hard stop. Okay. And that's how you want to do that. And again, you do not need the moving average to play that. I put the moving average there to kind of filter out the signals for those that may need it, but you do not need the moving average to play that particular price pattern. There are several more I plan to put out. So if you want to stick around, the channel and just kind of watch how this develop over time, I plan to put out information that's really, really simple, not nothing too subjective, because it's all about predictable behavior. So now let's take a look at that. Let's take a look at the hourly with the ranges. All right. So you can kind of see the predictable behavior I'm referencing. All right. So we have several days of data here. And again, you can just kind of get a quick glance at this, and then I'm going to show you that daily, try to show you that static zone that we're in and where we're headed. That's the next thing that we need to take a look at. So here's Friday. Again, kind of got stuck in there and just hung out in there for hours. Did overnight the same thing, just kind of hung right into that activity. There's those ranges, and we managed to go ahead and push out of them. And that's what we just went across just now, this area right here. We just picked that apart. And clearly you can kind of see, of course, from, one range to the next, we'll accelerate, kind of play ping pong back and forth, play above them, drop down, and do it again. Is all the, again, predictable behavior. All right. So that's what you have. And again, you can just take a look at it and you can kind of see this is an hourly chart. I just, of course, colored the bars just based on just some trend stuff. And so that's what you have here. And you can kind of see where we're pulling down. It's definitely close, to these ranges where they tend to run out of. Let me get these crosshairs really quickly here. And again, acceleration in between, of course, in between them, because if they're trying to get from one range to the next, that's what you're going to get. And so we had a reach up here, kind of tag that, drop down, move down a little bit further, right into, this area right in there. And there's your next pop. And you can kind of see definitely all of this just on the way down. You can kind of see how we're pulling right into these ranges, turning back around, referencing them on the bottom side, pulling back up, hitting the lows or the means of it, turning back around. And again, so I'm gonna have that information right there for you in the information right below this video, so you can go ahead and take a look at that and learn the times and how that works. Now, as far as where is the daily going? All right, so we have our static levels. I just put a few zones up here for you. We should wind up here. Clearly, that's where we're going. Once we get there, this is something you'll want to pay attention to. Once we get there, we may do exactly what we did here. We hit this zone, drop down, and of course we found that support and we took right back off. Kind of based here, of course, we did do that, but we're definitely breaching it now. And so I expect us to go ahead and climb. Just go ahead and climb for the next day or two. Try to get on up there if we can. But if not, there's a chance we may come right back into here. It's a chance we may come right back into here, and hopefully then, go ahead and move back up. I don't want to see them back down here. I don't want to see that. So hopefully of course, the next 2 days, we can go ahead and get there. Now, every time they stop, and this is something I keep telling everyone, when we stop, you got to expect them to go at least 3 bars after they take off again, because that's pretty much the behavior. 1, 2, 3 is predictable. All right. So they're going to go at least 3 bars. So, this pause right here, I totally get it, but we're supposed to keep going. And that's what we're doing now. So if you're looking to where it should be going, this is it. So once we get here, right up here near the 15,000 there, once we get there, I do expect something a little bit more substantial. Now, I hope that that's not the case, but given how the markets work, it definitely should happen. So right into that 15,000, right in there. It can begin as early as here. It can lean back. Okay. Hopefully not too far, but it can lean back, pull down, and then of course take back off. Now, when using the moving averages, this is something I'll just tell you really quickly here. It depends on which ones you're using, and you can use any of them that you would like, just whichever ones you would like. But when the candles breach the averages, and kind of you see the chart space in between, whenever you see that chart space, just know that the candles can kind of dig right into that. Just kind of know that, and you'll get an idea of what I mean. Sometimes they'll push right into that space before they take right back off. Just whatever averages you use is totally up to you. But it's the space on the candles, right before they begin to take off. You'll see the candles pull right back into that space. It's almost like a gap in price, and most of the time you will see a big candle. But if not, it's that space that they're referencing. So you can kind of get a guideline if you're not using any of the information that I'm telling you. You can just use your moving average and kind of get a guideline as to how far they can lean back before they take off again. All right. So I wish you all the best with your trading. So that's what we should be doing for the next couple of days. And I'll be back later on this week. Take care.